We have a lot of retail exuberance in the markets, and we're now starting to see correlations just kind of all go to one, whether it's gold or whether it's emerging markets or international markets or Bitcoin. The correlations have all moved to near one, and this doesn't happen very often in the markets, but this is because there's too much money chasing too few assets, and that really kind of brings us up to talking about what you need to know before the bell this morning. Markets are doing just fine. So markets were closed on Monday. Nothing happened yesterday, if you were wondering. But on Friday, we closed right at all-time highs. Money flows continue to remain very positive, and of course, the kind of this positive action in the markets really last week, another winning week for the S&P, keeps that buy signal in place. So again, the markets are up about 5% for the year so far. Markets are doing just fine, really kind of coming out of the gate. We had a little bit of a sloppy start this year right at the beginning. First 2 weeks of January were a little bit worrisome. But really, ever since the inauguration, markets have been doing very well despite headlines of DeepSeek and despite headlines of tariff concerns, all those type of issues, inflation concerns. Markets continuing just to really kind of power higher right now. Not a lot of concern really across the board, but it's not just U.S. stocks, and we're going to go through this in a minute just very quickly, but we have a lot of retail exuberance in the markets, and we're now starting to see correlations just kind of all go to one, whether it's gold or whether it's emerging markets or international markets or Bitcoin. The correlations have all moved to near one, and this doesn't happen very often in the markets, but this is because there's too much money chasing too few assets, so it's lifting every asset class all at the same time. And in fact, if kind of looking at some other markets real quick, emerging markets have been doing very well, as also they're up sharply this year so far, having a very nice run. But be careful with this. Again, there's a lot of excitement. It's like this, this is the beginning of emerging markets and international markets outperforming the S&P. That's where you need to be this year. We've had this call like every single year at the beginning of the year, and that's really not worked out well. In fact, if we kind of go back just over the last 5 years, emerging markets still have not broken out of their kind of long-term channel, and again, just have been trading sideways now for 5 years. And yeah, we have these intermittent blips of outperformance relative to the S&P, but really have not seen that really emerge more into anything else. So that was international markets. Sorry, emerging markets are the same way. Emerging markets remain doing very well at the beginning of this year, but we see that kind of at the beginning of every year. Everybody gets all excited, and then nothing really comes out of this. But emerging markets still much lower than they were back in 2021. So, again, just on a relative performance basis, yes, they're doing okay right now, but the economic dynamics certainly don't bode well for both emerging markets and industrialized international markets, which are very, very close to recessionary territory in a lot of fronts. But again, globally right now, there is money just chasing assets everywhere. So it's just lifting all asset prices at one time. The question is going to ultimately be, can international and emerging markets really start to play catch up with the U.S.? Certainly possible. But again, just be careful. We've seen these types of early year kind of moves of exuberance in markets. We get these high correlations that all exist at one time, and then things kind of break and fall apart after that. That's what you need to know before the bell this morning.